you guys for showing up. As Spencer said, I'm actually an associate graduate. I graduated not too far in September. I have been involved with the blockchain space since 2015. I helped with founding Ziki Capital since like a year ago. We actually a fund, so we invest in projects. Usually, we invest in early projects, like equity project or early seed project. But that's not the stuff that you want to do, like just for now. So I have prepared some questions in case if you don't have questions, but I would like to hear what you are willing to hear. What is the points that occupy your mind?
What are usually when investing? What are usually some red flags when looking at a startup or like the areas of watching along?
Okay, so this is kind of an advanced question. So before I jump into that, let's me ask that. Like we are speaking about investments, right? So have any of you done any investments outside that crypto space? Okay, 1, 2, 3. So let me ask this: what do you know about investment? What is your goal for investment? What's your goal for investment?
I mean, ideally, you buy low and sell high.
Exact. No, but this is not investment. This is trading.
Yeah.
That is a common mistake. When someone tells you you have to buy low and sell high, that's not investment. Investment by definition is a long-term process. So yes, you buy low, but you sell high maybe 5 years in the future, 6 years in the future, not a couple of weeks from now. Okay. So most of people your age has like loved crypto because it gives you some investment opportunity, right? See your first time to see a chart, first time easy for you to click buy, first time to easily click sell and make money, right? So it's easy, but it's dangerous. I will tell you why. So just like I made a huge list, just warning signs. But I will get to the question we got. If I told you, go invest in Bitcoin or buy Bitcoin or Ethereum or whatever newer altcoin, Definite, for example, what is the red flags you can see to tell if this is a good investment or not? I would say the most important flag is what is your benefit? If I came to you and said you buy this coin or buy this product, you should ask me, why are you interested in me buying this stuff? What is your benefit here? So if I told you buy this coin, but I'm the guy who actually started this coin, so I am gonna benefit from your money. So this is the first red flag. If I'm gonna benefit from your money, then you should stop and think, does it worth it? Is it worth it to buy this coin or buy this cryptocurrency or whatever? This is the first thing. The second thing I would assume is if it's a copycat technology. If someone giving you a new coin and then you ask him, what is the new technology? He said, no, it's just a copy of Bitcoin, but I changed this kind of parameters. The block is 2 seconds instead of 10 minutes. Then it doesn't make. So what is the logic? Why are you doing this tweaking? The third thing, which is the opposite of being copycat, is someone saying, okay, I'm coming up with a new technology. No one have ever heard about it, but it's not tested. No one have ever peer reviewed this idea. No one has ever done anything useful with it, but I will make money out of it. So go for it and buy it. That's one of the 3 red flags that we look into. And the fourth one, especially with the tokens, not cryptocurrencies, and there is a big difference between tokens and cryptocurrencies. If the team who is developing the token is not experienced enough, because all this issue of cryptocurrencies is software after all, right? And software has bugs, right? And if you follow the news, every now and then we find bugs, even in Bitcoin, right? So a major bug can just collapse the whole project in few minutes, just like that. In few minutes, you can collapse the whole project. So the experience of the team working on this project says a lot about the project.
You said there's a difference between a token and a Bitcoin?
Okay, so let me ask you this. Do you know the difference between a cryptocurrency and a blockchain? Is there a difference, or is there the same? Anyone have a clue?
There's a difference. Blockchain is the technology underlying the cryptocurrency.
Okay,
It's like basically blockchain is a ledger that is published on the internet. Saying all people who own a particular currency or a cryptocurrency.
okay. So I will just rephrase because he may be like not everyone listen. So he said cryptocurrency is our blockchain is part of the cryptocurrency, right? So that's part of the answer actually. Blockchain is a kind of technology. It's not very new technology, by the way. It actually didn't start with Bitcoin. It was there before Bitcoin, but no one used it to make money. So this is Bitcoin was new to use blockchain to make money. That's one thing. And cryptocurrency, what makes a cryptocurrency is that it uses blockchain, and I would say blockchain is only 15% of what is cryptocurrency. A cryptocurrency actually is economic design. It's a problem for economic design. Blockchain is just one piece of that technological foundation for this cryptocurrency. So you have to come with a game theory or a mechanism design. When how to make money. If I told you that today I'm gonna make money, then you will ask me, so you are printing money? So if I got your money and used it, you will print more for yourself? That's one thing. Is it easy to print money for myself? If that's so, that this money doesn't worth anything. And all the trials to create digital money before Bitcoin failed for this exact reason. Because people had an authority to print more money. So blockchain is different from cryptocurrency. But what is the difference between cryptocurrency and a token? What is cryptocurrency and what is a token? So let me ask you, is a Bitcoin a cryptocurrency or a token?
Cryptocurrency.
Exactly. Cryptocurrency means money. If the coin or the things that we are dealing with has no other use than money, then it's a cryptocurrency. If it's just money, okay? And if you observe what is called the cryptocurrencies right now is actually money. Bitcoin, maybe Zcash, maybe Monero, few of them. But other tokens other projects that also they identify as cryptocurrencies, they are usually either a token, a pure token, or a mix between a cryptocurrency and a token. So I will take the most famous example, Ethereum, which you already know, right? Is Ethereum a token or a cryptocurrency? What do you think? It's a harder question, by the way. It's a mix, actually. You can use Ethereum as a money, and you don't care anything about any other thing. You can use it as a money. You can go use one Ethereum, buy some food, some coffee, some whatever, and that's money. That's fine. But does it give you anything more than money? Yes. It gives you access to a platform. You can build your application, as you learned last week, on top of Ethereum network, right? So, and without holding the Ethereum token itself or the Ethereum coin itself, you don't have access to this platform. You cannot deploy your product. You cannot deploy your system. You cannot make users use it. So it gives you some access right. It gives you access right to use the system. So it has some kind of, when it's like that, let's call it a token. It gives you access right to something. All the other projects that have a specific use case, like if you are familiar with many projects out there, some projects tell you, if you want to use this exchange, you have to have this exchange token. They call it exchange token, not exchange currency. It gives you some access right. There is some trials to build social media on top of blockchain. Steam it, one of them. Steam coin is, in this case, it's a token, it's not a cryptocurrency. So when you use that token for a specific use case, then it's a token. Sometimes mix it with cryptocurrency because it has value. But when it's only money, then it's cryptocurrency. Does this answer your question?
So with a token, does there have to be a project defined to that particular token? So like, so if you have a token and its use case, or it's basically its use case is to transfer money from country to country. Would you use that token to transfer the money, or the underlying or the project?
Okay, if your only goal is to transfer money between country X to country Y, that's not a token. That's a money. Money is transferable, right?
Right.
If money is not transferable, it doesn't mean anything. So if that is the only use case for your project, then your project is defined as money or cryptocurrency. A token should give you some access right to some platform to do something else with it. That's why I identify myself identify Ethereum as a mix of a cryptocurrency. It's a money, we can transact with it, and a token.
Okay. So let me ask this. So if you have the tokens and it gives you access to the platform, how would you access the platform without through the token? How would you do that?
Okay, you can't access the platform most of the time without using the token. So give me an example of some tokens that you know, and I may know too.
EOS.
EOS?
Yeah.
Okay. EOS is a similar concept of Ethereum. It doesn't have much difference. It's actually
what about the
0x.
Yeah, that one.
Okay. 0x is a token. Why it's a token? Because it is a basis for a bigger system, which is decentralized exchange. I will not say decentralized exchange, but I will replace this term with non-custodial exchange. What is a non-custodial exchange? Exchange that we have a company that promises that it allows us to exchange money. You can buy your Bitcoin and send me your Bitcoin and buy Ethereum. But for the exchange to work, both of the sides have to deposit their money as the exchange company, right? There is an alternative which came out recently, which is decentralized or non-custodial exchanges, when you can keep your money, and let's say that you are dealing with a Spencer, and the Spencer will keep his money until you agree that you want to do the exchange with Spencer. Then all of a sudden, your money goes to him and his money goes to you without passing by a central exchange. That is the point of 0x.
Okay.
It was designed around this idea. And most exchanges that use 0x or use this kind of non-custodial exchange charge their fees dominated in 0x. So that is the point of a token. It makes you do something. I can use another example, which is social media. There is an effort, or was an effort like 3 years ago, to build a social media platform, like Reddit, for example, on top of blockchain. They call this Steam. And they created a token called Steam token. In fact, you cannot even get access to that or post something to the social media unless you have some tokens. So the idea is that if this social media platform succeeded, many people will want to join. Every one of them will go buy some coins, and this will create demand on the token, and the token will have a bigger value. That is the idea. But the token here mainly is to give you access to the platform.
Okay, so if you already have these tokens and you have some kind of code or something like that that can talk to the underlying platform or project, creating so like for the decentralized exchange or non-custodial exchange part, if say me and Spencer, I have Bitcoin, he has Litecoin, but I have to own the Xerox token in order to exchange the Bitcoin for his Litecoin?
Okay, just to clarify, 0x is a token that was built on top of Ethereum, right? So 0x is used only to exchange token that was also built on Ethereum, which is called ERC20 token. Okay. So if you want to exchange Ethereum or wrap the Ethereum in this case with any other ERC20 token, you will have to use 0x. Bitcoin and Litecoin use their own blockchain, so they cannot be exchanged at that using 0x. There is a lot of effort trying to how can we allow Bitcoin to be exchanged on these non-custodial exchanges. There is so many efforts. I won't delve into that because that's a long story, but we can chat about that after the event if you want. Okay, any questions?
I kind of wanted to ask a follow-up about kind of the taxonomy of things, especially like the vehicles you invest in. I know you talked about the difference between like tokens and cryptocurrencies. Like as a fund, when you think about investing in startups or projects, how do you compare things like SaaS, tokens, equity stakes, and what are the priorities you're looking at in different vehicles?
Okay, that's a very, very, do you understand even the terminology he asked about? Okay, so let me first explain you these terms. Okay, let's first make a very clear line between what I do as a fund manager or a fund partner compared to what you do. You, in the investment terminology, you are called retail investors. You know these retail investors? You can go to a coffee shop, buy a coffee, right? That's the retail. But if you are the factory importing the coffee and making the coffee bags or whatever, that's a different story, right? So I am a retail investor, personal, but on the other, in the capital, my role is a fund partner, so I make institutional investments. Okay. So for you, as a retail investor, you can invest in tokens, buying and selling on exchanges. Sometimes you can participate in ICO or a token sale, which I will advise you against. I will tell you why. But most of the time, you as a retail investor don't have access to anything else. You don't even see the story behind that. You see some tokens, you go buy and sell it. As a fund manager or as a fund, there is a totally different story. Because we usually have the option whether to invest in the token itself, to buy the token early on, even before it goes to the public, even before it goes to the retail investors. Or we can actually invest in the company that makes the token. Let's say Spencer here decided to make his Spencer token. And he found the company, he got his guys and made a company. As a fund, we can buy shares in his company because we value the work they do. We don't care about the token. We value the work they do. So we can invest in equity. And usually when that's done, you have an agreement called a future, like a safe or the safe, which is like, yeah, the safe, not the SAF, the safe, which is a future promise for equity, not token. The SAF is a similar one, but they promise you tokens in the future. So there is a safe and there is a SAF. You don't care about that as a retail investor. But now, because of the regulations are not clear in the US, many projects are refraining from making an ICO. They don't go and make an ICO. Instead, they sell only to accredited investors or funds. So when they do that, they use the SAFT. And if they decide to do later an ICO or an initial coin offering, just to, if you're not familiar with the technology, normal people can buy. But because the regulations in the US are not very clear, many projects stop doing that. They are not doing any more ICOs. They just sell to funds. And when the time comes, they list on an exchange and allow retail investors to buy and sell on the exchange. Does that answer your question? Okay, so let me see some of the other questions that I have. So, do you know, by the way, you know this curve? Have you ever seen this curve before? That is actually the curve that tells you why crypto investments are very risky. This curve comes actually from something called the modern portfolio theory, which is trying to allow you to balance your risk versus your returns. If I told you you're gonna deposit your money in a bank and get interest rate, how much interest rate you can get annually? What is the best you can get?
Interest rate?
Yeah, in a bank. If you just put your money in a bank, can you get 1%? I don't think so.
Like 3%.
Like 0.1% maybe, right? So, but what is the risk you are taking? Are you taking any risk? No, right? So the risk is too low and your return is too low, right? So what is the next less risk? Do you know what's bond? A bond is a debt. You lend someone some money. But here you are lending the US government. You are buying a US debt. That's called a bond, a US treasury bond. So this bond gives you an interest rate of about 2%, something like that, or 1% maybe. But again, you are lending the US government and you are sure they are coming back, right? So if you are willing to take more risk, what are you going to do? You can invest in stocks, right? You say, okay, Apple is a good company, right? I will buy the Apple stock today. And maybe in 2-3 years, they will perform better, and I buy less stock. The returns will be even higher. It can get to 10% annually. But your risk is higher because if Apple performed bad or people didn't like the new iPhone or whatever, you are doomed, right? You will lose money. So as the risk goes up, the return goes up too. Okay, let's see. So this is the x-axis is the risk, the y-axis is the return. Can you relate cryptocurrencies on this curve? Where it would lie? Like just a mental exercise here. If you wanna locate Bitcoin in this curve, where it will be? Yeah.
Top right.
It's actually not the top right. It's like maybe at the top right of the room. It's way, way out of this curve. Because the risk will be much, much higher. Bitcoin volatility is so severe. And I'm not speaking about altcoins even. But the returns can be very, very big. Okay, just to give you just a mental example. Let's say that you heard about Bitcoin early 2017. Do any of you know that that's 2 years from now, before, right? Do any of you know the price of Bitcoin at early 2017?
Like 200 and something.
It was around
400.
600. Okay. So you have a $600, someone gave you a gift, so you used your gift money and bought 1 Bitcoin. By the end of 2017, what was the price of Bitcoin?
20K.
20K, 20,000. So how much money you made on your investment? Around 25 to 30x, something like that. You doubled your money 25 times. That's a huge return, right? Was there a risk? You may be happy, right? But is there a risk? Yes, there is a risk. Why? What is the price of Bitcoin today?
300.
Let's say 4K, right? So if someone bought at the end of 2017, which was 1 year ago, what is his returns now? He is deeper red, right? He lost a lot of money. Someone has $20,000, but now he had only what? $4,000, right? So what does it mean? That the investment has so much risk. The volatility, which is a change between highs and lows, is very high. So the risk is maybe above 100%. Or I will put it at 100%. Okay, but the return is too high. That's why I would advise people who are your age to be very, very, very cautious. Don't FOMO in cryptocurrencies. Cryptocurrencies are cool. This is cool. This is a new trend, right? Let's go all our money into that. You can lose big. You can lose big. Like I know people who, against my advice, I don't invest that much money in 2017, but people are greedy. Every one of us is greedy. Is that. And they invested, and whatever money he has 50K now, $50 or something with their money. So like, don't be very cautious. That's again one of the rules. If you are going investing in a risky investment, like crypto, just put your money that you don't care to lose. Let's say that you are going to have some dinner outside. How much this dinner will cost you? $20? That's not a big deal, right? You can invest this $20 because if you lose them, you will not be like a big deal, right? But don't get money out of your student loan, invest in cryptocurrencies. That will be a disaster, just to be clear. Okay? So again, that's one of the points that I prepared. Do you have any question regarding this curve? Because there's other points we can discuss. Okay. So let me see what else I have.
Actually, there's one question.
Okay, sure.
Wait, so your fund, does that mean you diversify your portfolio by like buying crypto and stocks and bonds? Or
That's like
only buying different things?
good. As an individual, I do that. Okay? But as a fund, you cannot have experience in everything. Because you have to build very specialized experience, right? So you cannot be a fund that invests in real estate. You cannot be and at the same time invest in stocks, bonds, and different funds. So our fund is just focused in blockchain because we are the people who have the most knowledge in this area. So people will come to us just to invest in this area. Their diversification in other areas comes to the investor level. People who give us money to invest, they have to diversify their portfolio. And whatever allocations they want to allocate to blockchain, we invest that for them.
But isn't there like a trend of how like if one cryptocurrency goes up, like all the rest of cryptocurrencies go up? Or...
Exactly. Yeah. Because this whole space is emerging, right? There is a very high correlation between Bitcoin and everything else, right? Which means if Bitcoin moves up, Ethereum moves up, Monero moves up, everything moves up. Okay? If it moves down, the confidence in the whole space goes down. As we go older and the technology matures, this correlation will decrease. You can go, Bitcoin goes up, but Ethereum goes down, or vice versa.
So like with that particular like situation happening in the future, do you believe that once we come like, have these different exchanges, like for you to exchange crypto for crypto, they asking for your information, like they know your customer type thing.
Mhm.
With that, and like I guess all these different cryptocurrencies coming away and everything, like once Bitcoin goes up, everything else goes up.
Mhm.
Do you think like that kind of relation between all those cryptocurrencies and being able to like, so say if you had like a stellar, right?
Mhm.
And it shoots, and
Steam, oh yeah, whatever, Stellar. Or,
yeah, and it shoots up to maybe $10 and it's like at a quarter right now.
Mhm.
And you exchange it for Bitcoin. Would that have like an impact on the Bitcoin price at
Okay.
the time if you were to move one to another
Okay.
during the rise though?
Of course, everything is correlated. Correlation means that there is a mutual effect. Bitcoin will affect all these cryptocurrencies, and this all cryptocurrencies will affect Bitcoin. Okay? Because why? When you try to buy other altcoins, we call this altcoins, you have to sell Bitcoin, right? You create selling pressure on Bitcoin, and you create demand pressure on this altcoin. So what will happen is that altcoins will increase relative to what? To Bitcoin, right? But what will happen if you try to sell this altcoin? Now you don't trust this altcoin. You are trying to sell them. So what is the option that you are going for? What are you getting in response for your sellings? You are most likely you are selling the altcoins to get what? Bitcoin. So when you sell altcoins, you create sell pressure on the altcoins, but you create what on Bitcoin? Buying pressure. So Bitcoin price increases relative to the altcoin. And this cycle goes on and on. But when you have a bear market like now, some people are betting that Bitcoin will go down, right? So they are trying to sell, right? If Bitcoin is going down, because of the correlation, everything else is going down. So if you have altcoins, you sell it to get Bitcoin, but you also sell the Bitcoin to get US dollar. So everything goes down in this case. So it's a very delicate balance and the relationship between Bitcoin and the other altcoins.
So with that, like if the altcoin, so if the Bitcoin rises, right,
Mhm.
and the altcoin
may rise and may fall. It's something very weird. Okay, let's say that most people now are convinced that Bitcoin is a coin, that is a cryptocurrency, and all this other project would fail. What I would do? I will buy Bitcoin, but not move from it, right? I will keep my Bitcoin. I will not buy any other altcoin. But what happens actually is the following. People buy Bitcoin. If you have a new person coming to the space, the first thing they will hear about is Bitcoin, right? So they will go buy Bitcoin. But someone, you know what? This investment is even better than Bitcoin. So what do they do? They move their money from Bitcoin to altcoins. So what will happen then? When we start a bull market, which is, I don't know when it's gonna happen, but if it happens, Bitcoin will rise first, and after it rises and it settles for some time, you will see altcoins follow it. They will increase. Not all of them, the good ones.
So could we consider Bitcoin as the cash outcome?
Yeah, I would say that. Like Bitcoin is a exchange medium for the altcoin.
Right.
I want to follow up on Chris's question
Mhm.
about diversification. Could you, touch on the idea of generalized mining? And I know like CoinFund, ZK have been talking about using generalized mining to hedge your risk and diversify to some degree.
Okay, so just to not confuse everyone, because you not many know the term generalized mining. Let's use the meaning thing. Generalized mining is actually a network participation. So again, what is Bitcoin? What is Ethereum? What is all this stuff? How this stuff runs, right? There is a blockchain somewhere. If you decide to run Bitcoin, you have to download that blockchain on your computer and support the network, right? Once you are part of the network and participating in securing the network and make it run, that's network participation. Then there's another degree of network participation, which is mining. Bitcoin uses a consensus mechanism called proof of work. You know what is proof of work, right? Who doesn't know what is proof of work? Okay, so I don't have to explain proof of work. But essentially, proof of work needs energy to be done, right? Needs consumes energy. You have to solve some problem, and this problem, there is some hardware you need to run, and this hardware consumes energy, right? So if you take this effort, you put some money, when to buy some mining hardware, connect it to participate in the mining, that's a higher level of the network participation, okay? Before, proof of work was the only valid model, right? Until people came up with a different consensus mechanism, which is proof of stake. You are not required to go buy hardware connected to the power and consume energy. People said, okay, let's say that you have 1,000 coin of coin X, and someone else has another 1,000 coin of coin X. We can produce blocks using our stake, our balance. Right? We can produce more coins if we sign that, okay, these transactions are valid. Okay? So this is called staking, or you can move stake mining, whatever you want. So now there is so many ways of network participation. So just to collect all of them, people call it what? Generalized mining, right? So honestly, like from my own personal perspective, if you believe that Bitcoin or Ethereum or whatever is going to be a useful technology, you have to be participating in them. You don't delegate that, because if you believe in the network, you have to be one of the soldiers in the battlefield, right? You have to be participating. You have to be putting some effort. So generalized mining and mining hardware, proof of work mining or staking or whatever, all of these technologies to support the network. So what is the advantage? Why as a fund I would do generalized mining? First, because if I didn't do that, maybe no one else will do it, and the project will fail. That is a major risk. If I didn't support the network that I invest in, maybe other people will not do it. If I show that I don't have skin in the game, I don't participate, people will not participate. I have to be an example, a leader by example, right? That's one thing. Second thing, when you increase the supply of a token, what will happen to the token value? There is a relation between the supply of the token and the price. As the supply increases, what happens to the price? It decreases. Why? Let's say that we have a network value. The Bitcoin today has some price. Okay? And all of a sudden, I double the supply of the token. What will happen to the underlying assets, the coin price? It has to be halved because the network value hasn't changed. We use the same coin in the same way. Nothing has changed. So as the supply increases, your value of the token decreases. And this happens by proof of work and by proof of stake. If you don't stake or you don't do proof of stake mining, your tokens actually are losing value. So to prevent this kind of inflation or effective inflation, you have to stake to generate tokens that balances the reduction in price. That is the economy behind why funds and people who have a lot of tokens do mining. First, to support the project to succeed, and second, to protect themselves from the inflation. Let's say that the US government gives you the option today to balance the inflation that happens to the US dollar by printing more money. Would you do it or not?
Yeah.
Why? Because you want to protect your purchasing power. This was possible in cryptocurrencies, but this is not possible, of course, in US dollars. You cannot go your home and print some US dollars, right?
So what about the idea of stable coins? And
Okay, the idea of stablecoin is very, very interesting. So everyone knows what is a stablecoin, right? A stablecoin is a coin that somehow you will fix its price to $1 or whatever coin. By the way, there is cryptocurrencies that are fixed to €1 or whatever. Okay, so there is two ways to do that. One way is that you collect US dollars from people, put all this money into the bank. Let's say I collect $1 million from you, and I will put it in some bank account, and I will generate $1 million and distribute it to the people. So I supported these stable coins by real money in the bank, right? These people call this big tokens or big stable currencies because I have the money behind that. Will this work? Most of the time it works, but sometimes it won't. Why? You know, there is some countries in the world that actually are pegging their currency against the US dollar. Right? Saudi Arabia, for example, are pegging their currency against the US dollar. Can they actually maintain this kind of balance? Yes, they have this money in the bank and everything. Can they support this money, this level? It depends on the market. If I lose trust in their coin and went to the exchange and sell, so the price will fall, even less than $1, even if you have the money in the bank. Like, and this happened, by the way. You know Tether?
Yeah.
Okay. Tether is supposed, let's say like that, it's supposed to have all this money in the bank, and they created tokens that support this money. But what will happen? People came out and said, okay, Tether is insolvent. They don't have this money. What happened to the value of Tether? It decreased. It traded at 80 cents at some times. So the dollar that was supposed to be a value a dollar was traded as 80 cents.
So like when people, I guess when the market starts to improve again, and at some point when people go like don't want to relive the 2017, the early 2019 kind of like decrease and like kind of don't want to relive that loss, would they put that money in the stable coin for it to sit there until the market's right?
Why, like honestly, why I would put my money in a stable coin? Like if I have an exchange that allows me to directly deal with US dollars, I would just use that. I have my dollar in the bank, I can move it to the exchange, buy whatever coins I want, I would do that. People who use stable coins use it because they want maybe to move faster between exchanges. To move a US dollar from your bank to an exchange usually takes 4 or 5 days, right? If you have a stable coin, you can move it from one exchange to the other in a few hours. At any time. There is no days off, right? So traders who use stable coins use it because of the user experience. They want to move faster. They want to move it from exchange X to exchange Y or arbitrage maybe. If the two exchanges use different prices, I can move my coin from here to there to sell, something like that. That's called arbitrage. So stablecoin has a use case, but whether they can maintain their value at exactly $1, it's very, very hard to achieve. Any rumor, any piece of news can easily fluctuate the price of a stable coin. It's not stable. It has volatility, but a much lower volatility than the rest of the assets. Other questions? Okay. Go ahead.
I read a paper that the paper is that he want to make a stable coin, and in this stable coin there will be two classes. One is like a bond, and the other is like stock. So what do you think if we use stablecoin to replace those stock with bonds? Will that still that picture there?
Okay. Like I will tell you, it's the same exact situation. Like when you have the money in your bank, it's the same situation as they say, okay, I will support or like bring my currency to the value of stocks and bonds, right? The problem is something called a black swan event. You know what's a black swan event? Something like 2018, when a major news or major global financial crisis hits the market. What will happen? Everything will fall in price, right? Bonds, stocks, everything, right? So what will happen to stablecoin then? It will have the same effect. What is value dollar can actually trade at 50 cents. So most of these stable coins are very weak in the event of black swan event.
So in an event where things crash, would the crash be more detrimental to the stable coin or the actual crypto, like the Bitcoin or something?
It depends. It depends. Like again, cryptocurrencies are very volatile. People create stable coins to suppress this volatility, right? But what happens if you're like when you're trading cryptocurrencies, you know they are volatile, right? You know, so you are worried, you keep an eye on every move of the price. But what happens if you have, let's say, $1 million in a stable coin, and all of a sudden this stable coin that is worth $1 is trading at 80 cents? You're out, you are caught out of guard. Like, you didn't expect that.
Right.
You are expecting a stable coin to be always $1. That's why I see changes in the stable coin prices are more catastrophic than changes in Bitcoin prices. Everyone knows that Bitcoin is volatile. That's not a news.
Yeah, but like, what if for investors like who jumped in at 20K, and like for those type of investors, would the stable coin be like a good way of kind of saving that loss rather than taking a $15,000 loss when Bitcoin went from 20?
Okay. Again, do you see stablecoin as an investment? What are
No,
you?
I see it as a safe point for the rise of a particular currency. So if Bitcoin rises to 25K again, and the week after that or 2 weeks after that, it may tank to maybe 10,000. And if you put the money at 25,000 in the stable coin, and the stable coin only drops 10 cents, which one is more?
Again, if you are not investing, if you are not buying and selling Bitcoin or whatever, what is the advantage of having a stable coin versus a US dollar? You can hold your US dollar. What is that? What is the value of having? Like, stable coins is used just to facilitate trading, facilitate movement, right? If you are not trading, if you are not buying and selling or betting on the market, then why would you hold a stable coin? That's my question. You can hold, you can even bet. It's better for you to settle your cash in your bank, right?
So it's better to sell at the peak than to hold and wait to see if it's going to go up again or down.
What do you mean? That for Bitcoin?
Right. Like knowing the market's volatility to go up or go down at any point, but you got a stable coin that if it were to drop, it was only going to drop maybe 5 or 10
so
cents.
let's make an example to clarify. I give you $100,
Right.
and I told you to invest it. If you got this $100 and got 100 Tether, for example, did you do an investment? No, it will not change, right?
Right.
So you didn't do anything. But if you bought Bitcoin and Bitcoin went up and went down or whatever, you did some investment. When you do an investment, you can buy, you can make a profit, or you can realize a loss. But you made an investment. If you just take the $100 and put it in Tether, that's not an investment. You didn't do anything.
Right, but what if your investment was in Bitcoin and then you moved your investment to the stable?
It doesn't make much difference, because when you sell to US dollar or you sell it to Tether, both are tax. You have to pay tax on both. So what is the difference?
Do you?
Yeah.
There are Bitcoin ATMs where you can pull money out of machines. Cash.
If you are trading on an exchange, this exchange will issue you some tax document saying you have traded with us. They will not send this to the IRS, but you are liable to that tax. If somehow in the future the IRS came to you and asked you to make an audit, you are screwed, man. You have to pay the taxes plus penalties.
Why do you have to pay the taxes if you don't have a phone number associated with you?
That's has it changed now. Most exchanges now allow you to.
Not an exchange. What if you're not using an exchange and you're just using wallets?
You can do that. It's up to you. If you want to do tax evading, that's up to you. No one will like. By the way, even exchanges now don't send your transaction to the IRS unless you hit them like some
Transfer
mark.
to a bank, right?
Yeah, unless you hit 20K of trading volume per year, something like that.
Right. But so the idea of the cryptocurrency is to not have a middleman in this, like,
That is the ideal
vision
scenario.
for it,
That's a
right?
very good point, by the way. Like,
That was the main reason why this was even created. So like, even having the idea of exchanges is cool because this allows investors to be into it. But what about the people who seen the underlying vision of it and see the decentralization and, when the value goes up and how to, not really be taxed on it?
okay, so that's a very good question. And there is always a compromise or a conflict between ease of use and principles, right? Bitcoin was created as unsensible money. I can trade it whatever I want. No one will know, right? And it still can be done. I can go to Spencer, I sell him one Bitcoin, and he gives me the money in cash, and no one will know, right? I will send him this money in his address, and that's it. But again, you come to that a problem of liquidity. What is liquidity? I want to sell my one Bitcoin for 4K, but I cannot find any of you to buy it. So what should I do? I will have to go to some area where there's some liquidity. There are some buyers or some who are willing to pay for me. And where is this liquidity? On exchanges, right? So the ease of use, which is lack of liquidity, pushes you to go to somewhere else where the ease of use is available. You have liquidity. So that is a compromise. Yes, I recognize that Bitcoin lost of some of its principles when it's traded on exchanges and that stuff. But you cannot adopt users who don't care about Bitcoin unless you make it easy for them to use it, right? So it's an ongoing question. I will not have an answer today or 3 years, because until all the people in the world see the value of using Bitcoin without a middleman, it will not happen. That is a problem.
Very much.
Okay, let me ask you a question.
Yeah, yeah.
Okay, go ahead.
Yeah, so regarding like your fund and when you're trying to select different like coins to invest in, or I guess the companies behind the coins and whatnot, the institutions behind the coins, how much do you read into their technology, and what are some kind of like aspects that you look for in terms of like their vision for the future and the value that their coin adds? Because like there are a lot of white papers out there, they all propose these crazy things, right? How do you know like whether or not something will turn legitimate, or what are some factors that you look for, either in their technology or their vision, to kind of back them?
Okay, that's a good question. And actually, this question is actually what drove us to make the capital. Because in the traditional space, investment space, people who do investments are mostly people coming from the finance background, right? Engineers don't do this kind of investment. But in crypto, it's actually more difficult for finance people to do investments because there is very complex technology underlying all the projects. So we decided, okay, there is a gap here, and someone has to step in to fill this gap. To make a good investment, you have to understand the technology, right? You have to read the white paper, not just the white paper. You have to, if there is actual research behind this white paper, you have to go and read this white paper and the research that was published and peer reviewed for this kind of technology. And that's why how we structure the team. That our team in the capital has actually 3 PhD students, 3 PhDs. I'm one of them. Each one of us has like a focus on one technology that is very relevant to blockchain. And when we got a project that we evaluate, we go all the way. We evaluate, we read. The white paper is like the fair thing, but we evaluate all the technology. We have some kind of thesis, what areas we see in the world, what areas that we are not interested about. So if it fits our thesis, our investment thesis, and we see the technology working, we come to a third point, which is a team. Does this team have the experience to build what they are claiming they will do? And we evaluate the team on a different level. That's some of our process. And then, after we read all of that and prepare we come up with a list of questions. And we get in a call with the team, ask them all this question, and see how they are going to respond. Are they going to respond to this question in the right way? Are they open to listen to investors and people who have experience in the field, or they are defensive and no, that's what we do. And all of the mix of all these factors is what drives our technical investment decision, because there is another part of the investment decision. But for the technical side, that's what I control with my team. We have the technical experience to judge whether the project makes sense or not. There is another part which is business side, which is the product market fit, which is very important. What is the product market fit? Let's say I created a token today that I said that I will make a social media platform today, and I'm gonna compete with Facebook or LinkedIn or Reddit or whatever. I asked, okay, give me your plan, your marketing plan. How are you going to attract users? how are you? This is all this is not technical, it's like investing side. And we have also people who just do that. And when we have a good signal from both technical side and business side, then it's a goal for the investors. We invest in this people. And we decide how much we invest. It's a long process. Personally, I read like maybe at the peak of our investment time, I can read up to 5 white papers a day. That's like my bread and butter. It's a complicated process, especially with just all the details. And honestly, to get to a level of understanding, to be able to understand what you want and compare, it takes time. Like I started involved in this space being very skeptical. I didn't even understand Bitcoin. I was saying, what is the hell is Bitcoin? Why does it even have a value? That's internet money. It doesn't have an asset behind it. So that was my starting point. Once you do that, you start reading, you start learning, and actually I found this as one of the best ways to invest in the space. Let me get to a slide here which actually answers your question. Okay, let's say that you now decide to get involved in the space or invest in cryptocurrencies. What are you going to do? How do you invest? For me, what the point that fitted me pretty well, and I would recommend it to everyone, is the research point. You have to do research. You have to understand the technology. Even if you don't buy the coin, someone will come to you and ask, what is your opinion about that? What is the weakness of this technology? How I can improve in this technology? And you will be surprised. People are willing to pay you money if you give them a solid answer. If you tell this technology suffers from this weakness 1, 2, 3, people are willing to pay you money. Personally, I see this is a fundamental skill, because without it, you cannot decide which investment is good and which one is bad. There is the common ways to invest that you hodl, or like buy and hold the tokens, or trade, buy low, sell high, right? And even if you don't want to take any risk, let's say that, okay, I love crypto, I see it, it's a future, but I am not in the position to take any risk. How can you be involved in the space without actually taking any risk? I would advise to do exactly like what Spencer did. Go work for a company that is very involved in the crypto space. There is so many companies out there. They are hiring like crazy. They are very short on talent. They are willing to pay very good salaries. If you are good in programming and marketing, in even data analysis, research, all fields, literally all fields. If you know any of that, you can find good opportunities in the space. That's if you believe in the space. That's a very good point. If you don't believe in the crypto in general, don't do that. You will waste your life, right? But if you believe in the space and you believe that this space will grow, if you start now working for some company, your salary or your income in a few years will be way different than any other space. People who work it like in Coinbase, for example, 5 years ago, now they don't need any money. They are billionaires, literally. People who work at Coinbase and took their salary in Bitcoin, they are well off. They don't need anything. They are actually having funds in billions of dollars. So just to let you know. So if this is like I put it at the end because this is the least risk. You are getting your salary, but you are building at the same time your experience. You are building your knowledge base.
Yes, in the interest of time, I just want to end on the question of, so like, what led you to believe in the crypto space? And like, what led you to, do exactly that and dedicate your work to it?
For me, it's less of trust in the crypto space, but it's essentially distrust in government. Okay. That has a long background because I actually am originally from Egypt. And if you follow the international news, there was a uprising in the Middle East in 2011. I was in the streets back then. And governments are the worst. If you give them this ultimate power to control your life, they will control you. They will not control it in a good way. Actually, they will screw your life. And they will blame you for screwing your life. So what happened, for example, in Egypt, is that since 2011, until 2018, the value lost 80% of the currency lost 80% of its value. And it's still happening, even in the US. If you compare the value, the purchasing power of the US dollar between 1930 to 2018, you will find that the US dollar purchasing power has declined by 90%. So there is something wrong in this system. There is something flawed. How to fix it, I'm not sure. But crypto in general, or Bitcoin in specific, is one effort. I would never say that Bitcoin is a complete technology. It's not complete. It's still an experiment. And anyone tries to sell you the idea that Bitcoin is the most complete asset in the world, just remind him of the inflation bug that was discovered this year. It's still an effort. It's still an experiment. That's why it's super risky. That's why you need to do a lot of work to understand. You need to do a lot of work to be on top of the events and know what is going on. It's just an experiment. Whether it will succeed or not, I will give it a chance of maybe 90% it will succeed. But there is still 10% chance that it will fail and go nowhere. And all this money that we speak about, 4K, 20K, or whatever, will be actually zero. Don't rule out this. If you rule out this, you are delusional. Like, be skeptic. That's my advice. If you are involved in space, be skeptic about everything. And be skeptic about people. Don't trust me. Don't trust Spencer. Don't trust anyone. Trust people and minimize your trust. Minimize to the lowest level. See what people say, think about it, and do your own research. That is the key. You have to learn. You have to spend effort. If you don't do it, you will be like you are replacing the government with someone else. That's all. That is the issue here. So I see crypto as an experiment that has a good chance of succeeding. That's why I'm supporting it. I'm putting an effort. I'm running my node. I'm supporting my Bitcoin. I'm doing Lightning channels. If you have to put some effort. And even if you don't have any resources like you, right? You are students, and I was there less than a year ago, right? You don't have that much capital to support the market and buy Bitcoin or change the market. Your $100 will change the market in any way, by the way. But the thing that you have to support the technology. You have to research the technology. You have to come up with your own idea, right? And if any of you is a gamer, for example, if you have a GPU or if you have a good PC with a mining card, with a GPU card, you can actually participate in the network and be a miner. That's one of the investment ways. And even if the coin of your preference is not approved for, it's like Tezos, for example, or like Ethereum in the future, it will turn into proof of stake. You have to put your money on the line. You have to put your money where your mouth is, right? You have to stake your token. You have to support the network in some way or the other. That is how it's gonna succeed. Other than that, if it's like just prediction and like speculation and you are gambling, honestly, I don't see it going anywhere.
Awesome. Yeah, I think we'll end on that note.
Okay, sure. Thank you for listening. I hope I was useful in any form. And if you have any questions, you can just hit me up. I will be around.
Awesome. Thank you guys for coming. Thank you.